So welcome to all of you Shiksha 360, and today we will cover the chapter number 2 part 3. Clear? And in this session we have to discuss regarding the chapter number 2 part 3. So let's start. So in this session, first of all, we have to discuss regarding the obligations under international agreements. Clear? Obligations under international agreements. So that is the international agreements. What are the obligations? That is, banks are not permitted. Clear? That is, the banks are not permitted to open or maintain accounts. Clear? Banks are not permitted or not allowed. We can say that to open or maintain accounts of the individuals and the entities that appear. Clear? Banks are not permitted to open or maintain the accounts of the individuals and entities that appearing in the following two lists of individuals. Clear? That appearing in the following two lists of the individuals or entities suspected to have terrorist links. Clear? So with which two organizations? Clear? Suspected to have terrorist links, circulated and periodically updated by the UN Security Council, that is United Nations Security Council, UNSC. Clear? So first one, that is the ISIL. Second one, that is the Al-Qaeda sanctions list. Clear? The ISIL. Second one, that is the Al-Qaeda sanctions list, which includes the names of individuals. Clear? Which includes the names of the individuals and entities. Clear? Which includes the names of the individuals and the entities associated with the Al-Qaeda. Clear? Which includes the names of the individuals and the entities associated with the Al-Qaeda. Second one, the 1988 sanctions list. Clear? The 1988 sanctions list consisting of individuals. Clear? The 1988 sanctions list consisting of the individuals. Section A of the consolidated lists and entities. That is section B, associated with the Taliban. Clear? Associated with the Taliban. Clear? So if any individual or any organization clear comes under this list, so banks are not permitted to open the accounts of those. Clear? Okay. Now move to the next one. Following measures are to be required. Clear? Next one, that is following measures are required to be taken if any match is found. Clear? Following measures are to be required. Clear? Like what will happen if any match is to be found with that? Clear? So following measures are required to be taken if any match is found with any of the listed individuals or the entities. Clear? Following match are required to be taken if any match is found with any of the listed individual or entities. First one, that is to advise the Financial Intelligence Unit, clear, FIU India, and the Ministry of Home Affairs details of such account as per the UAPA notification dated 2nd February 2021. Clear? So in the examination, they will ask this type of question like, what are the precautionary measures we have to take? Clear? If any match is found as per the list, clear, in which banks are not permitted to open the account, that is, we have to advise the FIU, Financial Intelligence Unit India, and the Ministry of Home Affairs details of such accounts as per the UAPA notification dated 2nd February 2021. Second one, to follow the procedure of freezing of assets. Clear? Next point which we have to cover, that is to follow the procedure of freezing of assets of such individuals or the entities. Clear? To follow the procedure of freezing of the assets of such individual or entities with the order of the Ministry of Home Affairs. Clear? With the order of the Ministry of Home Affairs in accordance with the procedure. Clear? With the order of the Ministry of Home Affairs in accordance with the procedure laid down in the aforesaid notification. Clear? Assets of such individuals, entities with the order of the Ministry of Home Affairs in accordance with the procedure. Clear? In accordance with the procedure laid down in the aforesaid notification. Clear? So these are the precautionary measures which we have to be taken here. Next point regarding that, FATF. Clear? Like you have heard regarding the FATF. Clear? So what is the meaning of FATF? So FATF, clear, that is FATF basically issues the, clear, FATF basically what it issues, FATF basically issues the statements of the countries. Clear? FATF basically issues the statement of countries that do not or insufficient apply the FATF recommendations once in every 4 months. Clear? So FATF issues the FATF basically issues the statement of the countries. Clear? Issues the statements of the countries that do not or that do not in or insufficiently apply the FATF recommendations. Clear? That do not or insufficiently apply the FATF recommendations once in every 4 months. Clear? That is once in every 4 months. Banks should take into account. Clear? Further, that is banks should take into account risks arising from the deficiencies. Clear? Banks should take into account risks arising from the deficiencies in AML or CFT regime of the jurisdictions included in the FATF statement. Clear? Included in the FATF statement. Clear? So that is FATF identified jurisdiction. First one, that is FATF basically issues the statement of the countries that do not or insufficiently apply the FATF recommendations. Clear? So I request all of you, please tell fast in the comment section what is the FATF and when they will issue the recommendation. That is once in every 4 months. Clear? That is once in every 4 months. Further, that is banks should take into account the risk. Clear? Further, that is banks should take into account risks arising from the deficiencies in the AML or CFT regime of the jurisdiction included in the FATF statement. Clear? Included in the FATF statement. Next point which we have to cover here, that is also very, very important under this, that is the correspondent banks. Clear? Correspondent banks we will cover, and that is FATCA. FATCA and correspondent banks or correspondent banking, both are the important points here. So now let's discuss regarding that one by one. So first of all, that regarding the correspondent banking. Clear? Correspondent banking. So correspondent banking basically can be defined in general terms. Clear? Correspondent banking can be defined in general terms as an arrangement. Clear? Basically as an arrangement under which bank. Clear? Correspondent banking can be defined in general terms as an arrangement under which one bank, that is correspondent, holds deposits by the other banks. Clear? That is the respondents. Clear? Just in simple language, that is one bank basically holds the deposit of the other bank and provides payment and services, other services to those respondent banks. Clear? And provides payment and other services to those respondent banks. I think you are aware regarding the correspondent banking, like in the case of the Nostro accounts. Okay, correspondent banks. Clear? It is an arrangement under which one bank, that is correspondent, hold deposits owned by the other bank's respondents and provides payment and other services to those respondent banks. Correspondent banking, it is the lifeline of global financial transaction. Like in any foreign country, any Indian bank has doing type with that bank, and that bank will perform all the functions. Clear? That bank will perform all the functions on the behalf of, like you can say that like SB doing any type with any other bank. Clear? In the New York bank. Clear? So this function will perform all the functions. Clear? With this bank will do all the work which is to be done by the SBA. Clear? In that country. Clear? So that is the corresponding banking. Like they have a tie-up. Clear? So corresponding banking is the lifeline of the global financial transaction and hence crucial for the international trade. Clear? And hence crucial for the international trade, travel and tourism. Clear? And hence crucial for the international trade, travel and tourism. At the same time, that is at the same time, it also has inherent. Clear? At the same time, it also has inherent in its activities and nature risk. Clear? At the same time, it also has inherent in its activities and the nature risk of abuse by the criminals. Clear? And nature risk of abuse by the criminals for money laundering and terrorism financing. Clear? Nature risk of abuse by the criminals for what? For the money laundering and terrorism financing. Clear? For money laundering and terrorism financing. Due to different level and the nature of AML or safety regimes in various countries. Clear? That is in the different countries, there are to be different guidelines. So correspondent banks are exposed to the money laundering or financing of terrorism risks to each other. Clear? So correspondent banks in that case basically are exposed to the money laundering or financing to terrorism risks to each other. Clear? To each other. Next one, that is reporting under the FATCA and CRS. Very, very important. Clear? So what is the meaning of the FATCA? Clear? Many are not able to understand what is the FATCA. Clear? Like even in the account opening form, you will see the word FATCA. So what it represent? First of all, you have to remember what is the name of the FATCA, that is Foreign Account Tax Compliance Act. Clear? What is FATCA? FATCA, that is Foreign Account Tax. Clear? Foreign Account Tax Compliance Act. Clear? FATCA basically stands for the Foreign Account Tax Compliance Act. It is a tax information. What is FATCA? Basically, FATCA, it is a tax information reporting regime. Clear? It is tax information reporting regime which requires the financial institutions. Clear? Which requires the financial institutions to identify their US accounts through enhanced due diligence reviews. Clear? Which requires the financial institutions. Clear? Which requires the financial institutions to identify their US accounts. Clear? To identify their US accounts through the enhanced due diligence reviews and reporting them periodically to the US. Clear? And reporting them periodically to the US Internal Revenue Service, IRS, or in case of inter-government agreement, to appropriate government authority. Clear? That is, they have to report to the appropriate government authority. Clear? So what is the meaning of the FATCA? Clear? What is the meaning of the FATCA? So why this act will be launched, that is, or why this act was enacted, that is very, very important, this point, that is, this act, the purpose of this act is to prevent the US persons from using banks and other financial institutions outside the US to park their wealth outside US and consequently avoid US taxation on income generated from such wealth. Clear? So what is the main motive? That is, if they are earning any income from that, so, or basically they are trying to avoid the tax. Clear? From that. So to prevent that thing, this act is to be enacted in pursuance of Foreign Account Tax Compliance Act. Clear? In the pursuance of Foreign Account Tax Compliance Act of the USA and common reporting standards. Clear? And common reporting standards of OECD Council. In response to the G20 request, G20, that is, it is an organization of the 20 countries. Clear? Income tax rules 114F, 114G, and 114H have been put in place that requires banks and financial institutions to declare if they are reporting financial institution in terms of these rules. Clear? If they are to be reporting financial institution in terms of the rules. Clear? So what is the important here? Just you have to remember that the purpose is to basically to prevent the US persons from using banks and other financial institutions outside the US to park their wealth outside US and consequently avoid US taxation. Clear? This is the main meaning regarding the FATCA. That is Foreign Account Tax Compliance Act. Okay. That is last one, that is. So these rules require the banks. Clear? These rules require the banks and the financial institutions to submit prescribed reports to the income tax department. Clear? To submit prescribed reports to the income tax department in respect of the accounts. Clear? In respect of the accounts of such customers. Okay, in respect of the accounts of such customers who are taxable in the US. Clear? Who are taxable in the US for FATCA and any other foreign country. Clear? For CRS. Clear? And any other foreign country. Clear? For any other foreign country that is to be termed under the CRS, and for the US, basically it is to be termed under the FATCA. Clear? So please remember that. This one is important point. And for the examination point of view, this is also important. Now move to the next one. Reporting obligations. Clear? We will expect questions from that also. So reporting obligation, that is banks are required. Clear? Here that is banks are required to furnish to the FIU India reports pertaining to the transactions of prescribed type and value at the prescribed frequency. So that is monthly reports. Clear? So what are the 4 monthly reports? So following 4 reports are required to be submitted for each calendar month. Clear? Following 4 reports are required to be submitted for each calendar month by the 15th of the following month. Clear? By the 15th of the following month. So what is the report and what is the nature of transaction? Clear? Which we have to report. First one, that is the report, that is CTR. Clear? CTR basically stands for the cash transactions report. Clear? CTR basically stands for the cash transactions report. So cash transactions of rupees 10 lakh or more. Clear? Cash transactions of rupees 10 lakh or more or equivalent. Clear? So this we have to report. Second one, that is if the amount is even less than 10 lakh. Clear? But there is a series of the transactions. Clear? series of transactions, clear, series of transactions in a month integrally connected to each other, clear, series of cash transactions, clear, series of cash transaction in a month integrally connected to each other, clear, integrally connected to each other, that is all deposits or all withdrawals, clear, that is all deposits or all withdrawals taken separately, aggregating 10 lakh or more or equivalent, clear, aggregating 10 lakh or more or equivalent, clear. So that is comes under the CTR, clear, that is CTR. Second one, that is cross border wire transfer report, clear. Second one, that is cross border wire transfer report. So cross border wire transfers of more than 5 lakh or equivalent, clear, cross border wire transfer, clear, cross border wire transfer of more than 5 lakh or equivalent, where either the origin or destination of fund it is in India, clear, that is either the funds are transferring from India to any other foreign country or from the foreign country funds are to be coming in India, clear. So that is to become the for cross border wire transport shift, and this we have to report by the 15th of the following month, clear. Like if the transaction is to be occur in the month of the June, so we have to report till 15th of July. Then next one, that is NTR, non-profit organization report, clear. Next one, that is NTR, that is non-profit organization report. So that is, it is basically to be known as the receipts by the non-profit organizations, clear. Receipt by the non-profit organizations of more than rupees 10 lakh or equivalent, clear. What is that? Basically, it is a receipts by the non-profit organizations of more than rupees 10 lakh or equivalent, clear. Receipts by the non-profit organizations of more than rupees 10 lakh or equivalent. Fourth one, that is the counterfeit currency report, clear. Fourth one, that is the counterfeit currency report. So that is basically all counterfeit currency notes received, clear. All counterfeit currency notes received, that is, we can say that like duplicate note, clear. All are to be reported by the 15th of the following month, clear, by the 15th of the following month, clear. So kindly remember the full forms of that. First one, that is the CTR, that is cash transaction report. Second one, that is the cross border wire transfer report. Third one, that is the non-profit organization report. Fourth one, that is the counterfeit currency report. So next one, that is the STR, clear. Now one next is the STR, clear. This is to be reported within 7 days, clear. So banks are required to report to FIU India any suspicious transaction noticed by them within 7 days of establishing that suspicion, clear, within 7 days of establishing the suspicion. So a transaction is considered as to be suspicious if it to a person acting in the good faith, it appears to satisfy any of the following, clear. It appears to satisfy any of the following. What are these? First one, that is a reasonable doubt that it may involve proceeds of any offense specified in the schedule to the PMLA that is likely to be for money laundering, clear, that is likely to be money laundering. Second one, that is appears to be made, clear. Appears to be made in circumstances, clear, appears to be made in circumstances of unusual or unjustified complexity, clear. Appears to be made in circumstances of unusual or unjustified complexity. Third one, that is appears to have no economic rationale or bona fide purpose. Fourth one, that is a reasonable doubt that it may involve financing of the activities relating to the terrorism, clear. If there is anything arising that is that type of transaction basically related to the terrorism, clear. So in that case also we have to report it as a suspicion transaction report. And in the case of suspicious transaction report, there is nothing, any criteria of the amount, clear. For reporting the suspicious transaction, the value of transaction, it is not relevant, clear. The value of transaction, it is not relevant, clear. So these are the transactions relating to the monetary, clear. Even in the case of the non-monetary, clear, like very, very important point. Even non-monetary transactions are to be reported, clear. Even the non-monetary transactions basically are to be reported. For instance, unusual operations of the locker, clear. Sometimes you will find that like there are 12 or 15 times in a year the operation to the locker is to be free, clear. But you will see that frequently locker is to be operated, clear, on the daily basis, clear. So there is a rising, clear, that is even non-monetary transactions are to be reported. For instance, unusual operations of the locker, clear? For instance, unusual operations of the locker, clear? Even attempted transactions are to be reported, clear? Even attempted transactions are to be reported. For example, a customer not proceeding with opening an account, clear? A customer not proceeding with opening an account on being asked for certain documents or information, clear? A customer not proceeding, clear? A customer basically not proceeding with opening an account, clear? A customer not proceeding with opening an account on being asked, clear? On being asked for certain documents or information, clear? On being asked basically for what? For the certain documents or information, clear? So that is, there is a suspicious among that, clear? So there is a suspicious among that, clear? So that all the information leads to the completion of the topic. Suspicious transaction report, it is in the case of the both monetary and the non-monetary reporting obligation, that is general report CTR, CWBTR, NTR, CCR, clear? Next one, that is reporting under FATCA or CRS, clear? Correspondent banking and FATF. Very, very important. That is, they have to recommendation basically once in every 4 months, clear? Once in every 4 months. So thanks to all of you for joining this session. Hope all the important points it is clear to all of you, clear? We will cover the, now the next one, we will provide you the question in the group, clear? I will update in the group. We will discuss the question, and I request to all of you kindly go through the slides and all the session once again so that you are able to remember all these points. And thanks to all of you for joining this session.